3 winning tech stocks to buy as 2022 kicks off by Jesse Cohen in investing.com. 2021 was another excellent year for US stocks as some of Wall Street's major indices, the Dow Jones, S&P 500 and NASDAQ, all ended the year with strong gains as optimism over the global economy played a powerful role despite ongoing COVID worries. While there are plenty of reasons to be cautious about the stock market in 2022, mainly risks related to the Federal Reserve's tightening path and the ongoing coronavirus health crisis. These 3 proven winners are likely to continue providing shareholders with impressive returns in the new year. Alphabet. Google parent Alphabet shared soars in 2021 and are well positioned to continue their march higher in 2022 thanks to soaring demands for the tech behemoth's innovative products and services. Alphabet was last year's best performing FAAMG stock with an annual gain of nearly 65%. It ended Tuesday's sessions at $2,887.99 within sight of its record high of $3,037 reached on November 19. At current levels, the Mountain View, California-based internet search giant has a market cap of $1.92 trillion, making it the third most valuable company trading on the U.S. stock exchange, trailing only Apple and Microsoft. Google's 2021 rally was fueled by signs of broad strength in the online advertising market as well as booming demand for its cloud platform, which saw sales surge 45% to $4.99 billion in third quarter. The company has been investing heavily in its cloud business as it plays catch up with Amazon Web Services and Microsoft Azure. Additionally, Wall Street was encouraged by strong growth in ad revenue from Google's YouTube segments, which climbed 43% from a year ago to a record $7.21 billion in the last quarter. Looking ahead to 2022, Google is expected to see continued momentum from an ongoing surge in digital ad spending as the economy continues to rebound from COVID-related disruptions. The tech company's core ad revenue business saw a YoY gain of 43% to $53.1 billion in the previous quarter. Taking this into consideration, we expected Alphabet stocks to continue its strong uptrend in the year ahead. Indeed, the quantitative models in Investing Pro point to 15.9% upside in Alphabet shares from current levels over the next 12 months to a fair value of $3,348.46 per share. And second one is NVIDIA, which is NVIDIA, widely considered one of the global leaders in producing high-performance graphic processing units (GPUs) for gaming consoles, data centers, and self-driving vehicles. NVIDIA ended 2021 as one of the big winners of the year, with shares gaining 125% thanks to soaring demand for its chips. In addition, the company, which is the world's largest maker of video game chips, has stepped up effort in recent months to become a major player in the emerging metaverse space, which is viewed as the next generation version of the internet. NVDA stock climbed to a record peak of $346.47 on November 22nd. It closed yesterday, January 4th, at $292.90. At current levels, the Santa Clara, California-based tech giant has a market cap of $732.2 billion, making it the seventh most valuable company trading on the U.S. stock exchange ahead of names like JPMorgan, Walmart, and Exxon Mobil. In a sign of how well NVIDIA's business has performed in the current environment, the chip maker has turned in earnings reported that have beaten Wall Street's profit and revenue estimates in each quarter last year. The trend will likely continue in 2022 as NVIDIA's guidance for the current quarter made clear that the semiconductor giant does not expect any slowdown in the months ahead, with revenue forecast to grow by 48% year-over-year to a record $7.4 billion. Besides the anticipated uptick in demand for its chips used in gaming consoles and data centers, NVIDIA is also set to benefit from its growing involvement in the metaverse following the unveilings of its Omniverse software, a virtual world simulation and collaboration platform for 3D workflows. As such, we anticipate the positive trend in NVIDIA to continue in the new year thanks to its status as one of the leading names in the booming tech sector. Analysts too remain bullish on the stock. In an Investing.com survey of 42 analysts, 36 rate the stock as outperform, implying 16% upside from current levels. And the third one is ROBLOX. ROBLOX made headlines last year when the digital entertainment company completed its well-received debut on the New Year Stock Exchange in March of 2021. The San Mateo, California-based firm scored a gain of 48%, benefiting from strong demands for its widely popular online platform that allows users to easily play and develop video games in 3D virtual worlds. ROBLOX stock closed at $95.15 last night, earning the gaming platform provider a valuation of roughly $55.1 billion. At current levels, shares are about 32% below their all-time high of $141.60 tossed on November 22. Despite a recent pullback due to valuation concerns, we expect ROBLOX stock to continue its remarkable performance in 2022 thanks to its emerging status as one of the leading names in the budding metaverse space. At its recent Analyst Day event in November, company executives said that most consumer brands will likely need to employ a metaverse strategy in the next 3 to 5 years as corporations adapt to the shifting digital landscape. That should bode well for ROBLOX, which already counts notable names such as Nike, Chipotle, Mexican Grill, and VF Corporations, Vans Footwear as customers. The fast-growing tech company reported solid earnings and revenue when it posted third-quarter financial results on November 8, fueled by robust users' engagement and strong growth in customer additions. The gaming platform's average daily active users, comprising mainly teens and preteens, climbed 31% from a year ago to 47.3 million in the last quarter. Those users spent 11.2 billion hours engaged on the platform, an increase of 28% from the same period last year. Still, ROBLOX is not yet profitable as the company's net loss widened to $74 million in third quarter from $48.6 million in the same period the previous years due mostly to increased expenses related to its marketing, infrastructures, and research and development. Not surprisingly, 9 out of the 12 analysts surveyed by Investing.com are optimistic about Roblox stock. The consensus among those polled forecast a gain of roughly 22% from current price to $116.36 per share.